Welcome to Conversations, Season 2 of the MTA podcast series, a weekly audiocast featuring interviews with leading investment strategists, geopolitical experts, and other key thought leaders. Brought to you by the Market Technicians Association.
Winners think in terms of how much they can lose. Losers focus on what they think they will make. And people wonder why Las Vegas is so popular. Tuesday, July 12th, 2011. This is Conversations, the official MTA podcast series. And today's guest is Larry Pesavento. Larry Pesavento is a 45-year veteran trader. Larry managed the commodity department at Drexel Burnham in California for 6 years before becoming a member of the Chicago Mercantile Change in 1981. After completing 3 years as a floor trader, he was employed as a private trader for Commodity Corp in Princeton, New Jersey from 1984 to 85. And in 1986, he started Lunar Cycles, a bi-monthly publication focusing on astroharmonic cycles in the futures markets. In 1990, Larry began a search for the use of artificial intelligence programs such as genetic algorithms, fuzzy logic, and neural networks to determine the best way for trading futures, stocks, and forex markets. This endeavor has continued for the past 18 years. Larry has authored 10 books on trading and has appeared on CNBC many times with his predictions based on astroharmonic cycles. He has trained over 1,000 traders in the past 30 years. Larry Pesavento, welcome to the program.
Very good. Glad to be here.
Well, we're delighted to have you, Larry. 18 years searching for artificial intelligence programs. How's that coming?
Well, I'm still on the same program that I work with. It's operable, and it's been working for about 11 years. It just gives you a intraday edge is what it's about. It's good for shorter-term entries and exits. That's all I wanted it to do, and that's what it's done. So,
well, there you go.
I'm pleased. Yep.
Okay. Hey, that's great. Well, anyway, let's go ahead and get this thing started. As regular listeners know, we always start with a little personal history. We want to find out about the Larry Pesavento that you can't find out about on the internet. So, take us through, where'd you go to school? Where'd you grow up? How'd you make your transition to technical analysis? Anything that's pre-technical analysis that might be affecting you?
Well, actually, I started at Indiana, Terre Haute, Indiana, where I was born and raised. I have a BS degree in pharmaceutical chemistry with a degree in pharmacy, and I have an MBA in finance from Indiana. And what I did when I was in graduate school, I had a teacher that was heavily involved in trading silver and cattle and a few other things, corn and also soybeans and wheat. And he drove a Ferrari, and he was a college professor, so that got my interest. And he started buying silver in 65, I believe, like 1965, and that was my first venture into making some serious money. And after that, I said, this is what I want to do. But I worked for Eli Lilly for 10 years as a pharmacist in California. I was what they called a clinical coordinator. I set up research grants, but during the time that I wasn't working, I would be trading. And after I think it was the 10th year, I was making enough that I didn't have to work for them anymore, and I just went out on my own, and that was it. My big break came in 76 when Drexel asked me to run their commodity department in Beverly Hills, which was in the Mike Milken building. And I worked there during the Milken years from 76 through 82, and then in February of 82, I became a Merck member, and I traded in the S&P futures and the Swiss franc and the Deutsche Mark, and that's when we had the big pits there for the forex markets, and then also gold. Then I worked for Commodity Corporation from 85 and 86, and 87 I took a year off to write the book Lunar Cycles, The Trader's Viewpoint, and I've been pretty much on my own since February of 82. And like you mentioned, I've trained well over 1,000 people to do pattern recognition, swing trading. I don't get too many students anymore because most people don't want to do the work or spend the time necessary, to learn to be a trader. It takes a lot of work. It actually takes more than 3 days to become a professional trader. I try to tell people sometimes you can do it in 3 days, but it's going to take at least 3 days, and plus about another 300 days. So you just can't do it overnight. I mean, you're trying to make money that doctors make, and doctors go to school for 7 or 8 years. The good part is you don't have to do technical analysis for 7-8 years because, you're basically looking at a chart that has an X and Y axis. It has only certain things that it can do, and if you remember that the market can only do 3 things. It can go up, down, or sideways. And if you can determine what that is, you've got a big edge in the market. And if you add something else to that, like money management, that adds a little bit more to it. And if you add the mental discipline necessary, then add a little bit more. And you put it all together, and you finally can beat the markets consistently. You don't beat them every day, but you can beat them consistently.
Mm-hmm. Larry, that's a very good introduction or some background information. I appreciate that. Before we let that go, though, I want to focus in on one thing you said, and we'll get this out of the way because I think it'll be of interest to our listeners. I know it will be to me. And this, I don't know, maybe this is getting too deep into the weeds, but you mentioned that you were working for Eli Lilly. And then all of a sudden, the next thing you were working for Drexel Burnham. Now, what happened in between there? How did you make the jump from pharmacy to the commodity markets? I don't get it.
Well, I was trading in the office of Conti Commodities in Westwood, which is part of UCLA, right before Beverly Hills. And in that office were 5 of the market wizards. I'm talking about 1969, 70, 71, in that era. Bruce Covener, Mike Marcus, Ed Nofree, Ed Sakota, all those guys were operational out of that office, and we shared a lot of information and ideas. And after you were making $55,000-$60,000 a year in 1974, 75, that was a pretty good piece of money. But when you made $40,000 in 1 month, that's life changing. And I had more than several of those months in a row. And I said, I know I can do this full time, and so I did it. And I just finished a huge campaign in soybeans. And the people at Drexel tracked me down, and they said, we want you to manage our money. I didn't know anything about it. The story behind it is really phenomenal, the people that I met along the way, but it turned out to be the best 6 years that I had ever spent. I really enjoyed those years. I've enjoyed all the years, but if God said you get to relive 6 of them, I think I would pick that because...
Is that right?
Yeah, I had movie stars, sports figures. My kids were young. I got to be home at 1:30 every day. I worked from 6 to 1, and, it was just... and I was making really good money. Just fun, And everything's been fun, but, it's fun now. It's just those years I was younger and a little bit more naive than I am now.
Well, that's neat. That's a great story. I'm glad we took a moment to get into that a little deeper. Okay, so you've been through all this. You've paid your dues. You've had some good times. Larry Pesavento, what's your typical day look like now?
Now I usually get up around 5 o'clock. I'm in Tucson, Arizona. I wake up around 5 and check what the overnight markets are doing. I follow about 16 different things that I trade. 10 of which are foreign currency cross rates, and then I have 6 of the main futures that I look at: the stock index futures, crude oil, gold, soybeans, wheat, and I'm trying to think of the other one. It'll come to me in just a second. But there's about 16 things that I look at, and of those 16 things, I scan for the patterns that I want to do that day, and of those 16 things that I look at, I'll probably come up with about 8 or 10 possible trades, and of those 8 or 10, I'll probably get filled anywhere from 3 to 6 or 7 of those trades, and that's what I'm looking at. I don't look at the monitor during the day. I put the order in, and then try to go on and do something else. And that's basically what I'm trying to do.
Interesting. All right. Well, let's get into how you do that. This is our toolbox file is what we call it. We'll look at some of the tools you use. I hadn't planned on going to this bullet point quite yet, but I think with what you just said, that'll make a nice segue into it. I read that you use 4-minute charts to actually enter the trade because the Earth rotates 1 degree every 4 minutes. Can you expand on that and explain that to us a little bit?
Well, I'm a firm believer in the astroharmonics of the market, and it's being borne out by the recent article last year by the Royal Bank of Scotland, and even more importantly is that, Dr. Andrew Lowe from MIT wrote a book called The Evolution of Technical Analysis, and the first 50 pages of that book are nothing but astrology. And astrology is nothing more than numbers, and that's all I deal with is numbers. And so the 4-minute thing is just really, there's not a lot of difference between 4 minutes and 5 minutes, but if there's a natural point, the 4-minute might pick it up. I mean, it doesn't make a lot of difference between 4 and 5 minutes on a pattern recognition chart. And that's the only reason. My neural network that I work on is based on a 2-minute chart, which is 1/2 of the 4-minute, but it's based on pinpoint accuracy. But that pinpoint accuracy still only happens about 65% of the time, so you're still only dealing with probabilities. So most of my trading is concerned about making market errors and doing the right thing, not worrying about what the market's going to do, because I really don't care. The market doesn't care whether I'm in the market or not, so why should I? That's why I don't look at the monitor. I don't look at the monitor as though we're your enemy, because if your long prices are going up, if you're short, you focus on prices going down, and the reason why is you want to avoid pain. How many times if you've been in a trade and you see it go up and up and up, and then all of a sudden it starts to go down and down and down, and pretty soon it's goodbye house, goodbye car, goodbye wife. And this is what you have to do. Your trading starts after you put the order in. You got to focus on how do you get out of the trade. That's the most important thing of what you're doing. You got to control your risk.
Huh. All right. Hey, that's neat. Let's talk about some of these other tools you use. I know you watch the Bradley model, Lunar Cycles. Gartley's a big part of what you do. Give us some more insight as to these tools and how you use them.
Okay, the three major tools that I use are the AB equals CD pattern. That's the one that looks like a thunderbolt, thunderbolt to the upside, thunderbolt to the downside, thunderbolt going across, because the market only does three things, up, down, or sideways. And as a pattern recognition trader, you're trying to determine whether it's up, down, or sideways. These tools help define that. The Gartley pattern, which I think is the best pattern that any technician could ever use, is an ideal pattern because it forces you to trade with the trend. In other words, you're buying into an uptrend that's correcting, or you're selling into a downtrend that is correcting, and you're doing it in conjunction with the Fibonacci summation series of numbers. And I'm only using 4 numbers out of the series. I'm using 618, 786, 1.27, and 1.618. Anyway, these things help me determine whether we're in uptrends or downtrends, and that's what we're trying to do.
I understand you feel that trading is a lot like golf. How is that?
Oh, I'm actually a scratch golfer, so that's not a very good thing. My only handicap in golf is putting and driving. Those are my only two handicaps.
Only two
and
handicaps.
Plus the mental game. No, I wouldn't play golf. It's a lot like golf, though. It's like any professional sport. You have to prepare yourself mentally more than you do physically. If you look at any of these superstars like Magic Johnson, Larry Bird, or Michael Jordan, Tiger Woods, all these guys, it's all based on men. I mean, Tiger's still a great golfer. His head's just screwed up. If he ever gets that turned around, he's going to be, in great shape. But, it's a mental game. You have to know that you're going to win when you come in every day. You don't have any chance at all. The only way you can know that you can win is to have the knowledge that, what is the market really doing? That's why you folks at the MDA have something to give, is the fact that, technology is what really is happening in the market. It's basically a square chart with an X and Y axis. You have volume in there, and you have to look at the prices. If prices are going up, there are more buyers. If prices are going down, there's more sellers, and that's a lot of information. You put it all together, then you have a pretty good idea of what your trade plan would be.
Mm-hmm.
I don't look at any fundamentals. I don't listen to the news. I go to the movies that on like Too Big to Fail and The Inside Job and stuff like that. But as far as reading information from Bloomberg, that's all lagging indicators for me. The market is the real indicator of what's happening.
Mm-hmm. Before we leave our toolbox, couple quick questions. Lunar Cycles. Is there anything you could share about Lunar Cycles that listeners could take away with them today and start applying immediately?
Absolutely. If they would just go to Google and just toggle in RBS, Royal Bank of Scotland, Lunar, or Moon Cycles or anything like that, it'll pop up and it'll show the report that they did from 1928 through 2008, which is 80 years. And if they look at that, they will see that it's really 90 years. Sorry, was that 100 years?
Numbers are alive.
1928 to 2008, which is over 1,000 samples, and it shows that buying on new moons is very profitable, and selling on new moons and buying on full moons, and it was really an interesting report. But you have to realize that when you deal with astrology, people get a little afraid of it because it's has things that mystics use, and we don't do any of that. We're basically astronomers looking at the days that occur between these planetary things, because they're so accurate that they happen within the exact minute or second of when they're supposed to, and you can predict it out, several hundred or several thousand years in advance. And if you go back and look at the history and prove to yourself that these things actually worked in the past, then you have something that actually, you can hang your head on. That you have to prove it to yourself, otherwise, no good.
Mm-hmm. And finally, before we leave this, for those who've never heard of the Bradley market model, can you give us a synopsis of what that is?
Sure. Donald Bradley was a classical astrologer who in 1947 wrote a pamphlet where it was called Stock Market Prediction by Donald Bradley. He charged $4 for it. It was sold by Llewellyn Publications. They sold very few of them. And what he did is he conducted a siderograph, which is a compilation of the 12 planetary cycles that we have, going through each planet from actually used Moon, which is a satellite. It's not a planet, but we went through Mercury, Mars, Venus, all the others, and then he gave them a weight, either positive or negative. And depending upon the valence that he found, positive or negative, it gave a bias of whether the market should be up or down. And it is very good. It's particularly good when you have a Bradley date. In other words, where there's many of these cycles coming together. And we just had one on July the 7th. That was the Thursday when we had all the bullish news, and then of course Friday was all the bearish news. But Thursday, July 7th, was a very big Bradley date. It was very, very important. And until we take that out, we're in a downtrend in stocks, as near as I can tell.
Okay. All right. Larry, who would you list as perhaps some of your greatest influences, or perhaps you have some favorite books you'd like to share with everyone?
Yeah, I would certainly do that. First of all, I would like to, really recommend John Hill from Futures Truth. He was a big instrumental in being my mentor. He's still my good friend. He's 88, still trading. Dr. Ruth Miller, also 88, got me interested in astrology. She's also trading full-time at 88. Dave Nelson, who passed away many years ago, was very important to me. There was a whole bunch of other people, I would like to mention, but, I can't think of all of them or mention all of them. Eddie Horowitz, and, there's just so many of them that I can't really tell you all of them. But the books that I would recommend the first book I would recommend would be Trading in the Zone by Mark Douglas. And I would also recommend H.M. Gartley's Profit in the Stock Market. That book was life-changing for me, especially pages 200 to 250. There's no 50 pages in technical analysis that even compare to those 50 pages. Some of the old masters like Schabacher and Kerr and Wyckoff, those were also very good. I've accumulated a massive library of books, but if you just got the Gartley book and the Trading in the Zone book, and of course my book, Trade What You See. No, that's actually a very popular book on Amazon, and it is actually what I do. So if people are interested in what I do, they can buy Trade What You See and get an idea of how I use these patterns. And if they would like to contact me, just contact Larry at TradingTutor, that's TUTOR.com, and I'd be happy to send out my newsletter. I write a newsletter each week giving you my market views of Forex, gold, silver, crude oil, and the stock market. And it's pretty good. It's very popular. And
well, that's very kind of you. Speaking of your book, Trade What You See, we actually spoke with Leslie Juflis a few weeks ago.
Yeah.
And how did the two of you meet up?
She was in a post office up in Seattle and saw my picture there. And she wondered why. She knew who I was and wondered why I hadn't been arrested. So she called me and we started to talk. And actually, she attended a seminar back in the late '90s with Mark Douglas and I, and it was a live trading 5-day gig. And I was on one of my positive runs, and she was so impressed that she ended up working with me, and she helped run my website for about 6 or 7 years, and then went on her own about, I think, 6. I think she went out on her own to do her own thing, and she helped me co-author 2 of my books, Trading Essentials and Trade What You See, and she's a very talented lady and quite nice. So she's still doing her thing. Yeah. I think there's about 7 or 8 websites that of students that I have that are quite successful doing pretty much the same thing I'm doing, and I'm very happy for everybody. What Gartley did on page 222 of his book, which was a very poor description of what the pattern was, and that's what I expanded on over the years, is that pattern. And that is life-changing for many people. And Gartley I'm sure wherever he is in this universe, he passed away at 69, has been very pleased the fact that so many people have been changed by that pattern that he actually saw. It's just an incredible pattern because you don't have to pick a top or a bottom. You just be patient, wait for the correction, and that's what you want to focus on.
Mm-hmm, mm-hmm. All right. Well, we're down to our last minute here, literally. I know you charged for this next answer, but I'm going to go ahead and hit you with it because you started talking about it a moment ago. What are your thoughts on the markets for the, I don't know, days, weeks, months ahead? What do you see here, Larry?
Well, I think we're in a major bear market. I think we're ready to start the second leg of it. The real key point was that May 2nd high that we did not take out. And we've just made a massive head and shoulders patterns in the New York Stock Exchange Index that any market technician member would spot in a heartbeat. We came off of that shoulder with a vengeance on Friday and Monday. And that's telling us that, we're heading down unless we take out that high from July the 7th. It's just a massive head and shoulders pattern. And also in the Dow Jones Transportations, there's a perfect three-drive pattern that expands over about 7 months that is absolutely perfectly symmetrical highs. In other words, each high is exactly the number of days between each high, and each high is an expansion of 1.618 or 1.27, which are our Fibonacci numbers. So there's a lot of things. And then the other thing is we left a massive island reversal in the cash S&P last Friday. So until those things are violated, it looks to me like, we're heading to lower territory. There's a massive number of cycles that occur in October, the third week in October, which, as you know, has a strong tendency to be a, market low. And that's, we're assuming that, during August and September and October, the next 10 weeks or so, 10 to 12 weeks, we should be down. Not straight down, and there's a high probability we could get a CRASH because we haven't had one of those since 1987.
Okay. Well, we're going to leave it with that. Larry, it's been great having you with us today. Is there anything else you'd like to mention very quickly before we go? You want to throw out that website address again?
Just make the checks out to me, and that's it. You know where to send them.
Yeah, all right.
Oh, I'm glad to help out. I think the MTA does a great job of helping people. And, I'm a technician, so, you're going to have to sell me on the program because, I spent my whole life just on the X and Y coordinates.
Yeah. Today's guest has been Larry Pesavento, and that wraps up this week's MTA podcast. From SeattleTechnicalAdvisors.com, I'm Ed Carlson, together with our recording engineer, Shane Squark in New York City. Say goodbye, Shane.
And we'll see you next time, everybody.
All right, let's keep our stops tight. Good day.